Hey, good morning. It's Edna Keep live here for Mindset Monday. And today we're going to talk about the mindset of the real estate entrepreneur versus the mindset of the real estate investor and how they serve each other. I think it's a very important topic. A lot of people get it mixed up, and a lot of people don't understand why people would give you their money to invest in real estate. And it really is all about the service that you offer. So stay tuned and we'll get that covered. Just while I wait for everybody to join us, just going to talk a little bit about the weekend. I know around here the weather was absolutely fabulous. We got a chance to get out to our cottage yesterday. It was like plus 31. And I'm not a hot weather person. I really don't like the hot weather. So to sit on our deck where we had a nice breeze was the nicest part of it. It's the time to get out to the lake is when the weather is that hot. When you're close to water, it just cools you off a few degrees, and I don't mind that at all. The kids are busy. We had baseball on Friday and running around with friends all weekend. So my husband's away in the mountains doing dirt biking. So we'll see how he made out when he gets home today. I haven't heard from him, so that tells me he's probably having lots of fun. Anyway, so I'm going to get into today the mindset of the real estate entrepreneur versus the mindset of the real estate investor and how they help to serve each other. So first of all, a quote by Charles Dickens, which I absolutely love. It says, "No one is useless in this world who lightens the burden of another." And that's what I want you to focus on. The role of a real estate entrepreneur is to provide service to a real estate investor. Some people who aren't familiar with joint venture partnerships get leery or suspicious when I say using other people's money to invest in real estate. I've had lenders say, "Oh, another broke investor looking for investor money." And you know what? They just don't get it. They just think that that's what it's like if you're looking for other people's money. It's just that you're broke and you don't have any money of your own. Here's what I want you to know about how it works and why it truly is a win-win partnership. You are either the person with the money, that's the passive real estate investor, or you are the person with the time and the knowledge and the deals, and that is the active real estate entrepreneur. I know we used to always call ourselves real estate investors, and we changed it to real estate entrepreneur because the real estate entrepreneur is a person who puts the deal together and not the one that puts the money in the deal. Serving the money partners as a real estate entrepreneur is a very valuable service, and you need to know that you absolutely deserve to be properly compensated for it. You aren't just using their money, as I mentioned before. You are providing a great service. So yes, you get to use their money to be part of the deal, and they get to put their money in to be part of the deal. You probably couldn't do it if you weren't working together, either of you. So that's why it's a really good service. You're helping them invest in real estate and leverage their money, because again, they only have to put roughly 20% of their money in to get control of a full property, and you help them leverage their money, and maybe you can help them with 2 or 3 deals. And keep in mind that otherwise their money could just be sitting there stagnant. I did a blog post the other day about lazy equity or dead equity, and that's basically if you've got equity sitting in your home and you don't have it working for you, it's just dead equity. It's not doing anything for you. You could take that equity out of your home and put it into a building and have another building growing for you, just appreciation wise 3% a year, have somebody else paying that mortgage off and providing a couple great services. One, clean, safe, affordable housing to some tenants, and again, helping your investor get a great return on their money. As the entrepreneur, you're helping the investor put that money to work. A great real estate entrepreneur essentially becomes a real estate advisor to their client. This is why knowledge and training is so important. You're being trusted to find great deals and to manage that asset. And you know what? That's not always possible if you don't know what you're doing. You need to know what you're doing. That's why I teach people that, because everybody loves the idea of using other people's money to buy real estate. Everybody loves that idea. What a lot of people forget is that you have to be knowledgeable, because it's one thing if you're taking chances with your own money. It's a different story entirely when you're dealing with investor money. An investor needs to know you know what you're doing, and that you can make the money and first and foremost not lose their principal on them. So once you learn that, once you have some education under your belt and working with a team that has done it consistently, then that's something you can offer. Deals have to be profitable for both of you. You can't save your best deals for yourself and put your investors in so-so or iffy deals. You might get away with it once, you won't get away with it twice, and really the idea is to build long-term investors that invest with you over and over and over again. The investor trusts that you have the training and knowledge to bring forth great deals, first of all, and then to manage them. They don't want to micromanage you. They will if you force them to, but they don't want to. They really want to be passive investors. Busy money partners don't have time to find the deals. They don't have time to be looking for joint venture partners. They don't have time to go through the due diligence. That's why it's your job. This is why every joint venture partnership needs you, the real estate entrepreneur. So as an active real estate entrepreneur, you aren't just using their money to invest, you're facilitating the investment on their behalf. You're a team, or you're part of a team, and you each hold very crucial pieces of the puzzle to close a deal. And that's why when we talked earlier, there's the realtor is part of your team, the appraiser is part of your team, the inspector, the mortgage broker, the insurance agent. Like, there's so many different parts of your team that you all pull together. That's not easy, and to get a really good team pulled together takes some work. So that's why you do deserve your share of the deal. And when I say I've used other people's money to build our portfolio, we have $47 million worth of real estate. Other than the first two purchases, it's all been with other people's money. And the first two technically was other people's money because we took the equity out of our home and used that. So really it's been all of it. Using other people's money is not gimmicky. I know some people think it is. It's a term I use to explain to people that as an active real estate entrepreneur, you don't have to be the person with the cash to invest. Very, very key. There always does have to be money in the deal. You just have to realize it doesn't have to be your money. Look at it this way. Time equals active. That's your real estate entrepreneur. And money equals passive, real estate investor. That's the equation. Put that on your wall. There are two separate roles that need to be filled in order for the deal to work. Using other people's money is a fantastic service. Oh, excuse me. I was giving my girls heck this weekend. They've both had a bit of a cold, and they were drinking out of my water bottle. And guess what? Now I have their cold, so they both got heck from me this morning. You don't be drinking out of my water bottle. I keep my water nice and cold, so they always think they got to drink out of mine. Anyway, like I said, using other people's money is a service to an investor, not a burden. You are very, very, very valuable to a deal like that. A lot of wealthy people realize that real estate is a great place to hold their wealth or to build their wealth. And that's where the service comes in. A lot of people don't know how. That's why they invest in stocks and bonds and they invest in mutual funds, because there's a ton of people out there who sell that stuff. There was a going thing. I know when I was an advisor for over 20 years, and there was no such thing as a real estate investment advisor. So that's something new, but it's something that I'm actually working on getting a designation for right now and helping my team get a designation for, because we want to be able to really advise people on real estate investing and all forms, because there's so many different ways to invest in real estate. You can invest as the equity partner, put your money down on a long-term hold building. One of the things that we're working on right now is we've got an opportunity to buy a couple of buildings where we know we'll be able to pull the equity out within a year. So we've got some investors lined up who just want straight interest on their money. That happens a lot. Some people don't want to be part of the deal. They don't want their money tied up for a long period of time. They just want interest, and we love those people, you know. And you as the real estate entrepreneur, the different ways that you can make money, because one of the big myths in real estate investing is the fastest way to make money in real estate is through fix and a flip. And I know that it's really popular because there's a lot of that on TV. I know there's different people coming to our area all the time looking for people to join their programs. I'm going to teach how to fix and flip. I'm going to fund your fix and flips, all this kind of stuff. And just know that unless it's a really, really good deal, they're not going to fund it first, because if it's just an average deal or a below average deal, they're not going to fund it. I know, because we got caught in one of those opportunities, so to say. There were so many hoops that we had to jump through. It was unbelievable. And so like I was saying, one of the biggest myths that there is out there is the fastest way to get money in real estate is to do a fix and flip. And they're generally looking at a 3-month term. I think the best way to get quick money out of a real estate investment and build your long-term wealth at the same time is to help people get into long-term buy and hold apartment buildings. You, as the active real estate entrepreneur, raise enough money to cover an acquisition fee for yourself. So if you're buying a $4 million building, generally what we do is we take a 1% acquisition fee. So that's like $40,000. Now keep in mind, your investors are then paid out over the next 5 to 7 years until the investment's fully paid out while you're managing the deal. And so that's your only pay in that time period, unless you happen to choose to property manage it yourself. And in a lot of cases, you can't even get funding unless you have a professional property management firm. So keep that in mind too. It's not always allowed that you can just manage your own building. There's a ton of knowledge to managing a building. It's not just walking in and collecting the rent. And a lot of people don't realize that either. So when I promote property management, it's not just because it makes our lives easier. It's because there's a lot of work as a property manager to do it right and do it effectively. So that's a big deal. So like I said, when you're looking at doing apartment buildings, you're getting cash now. You're building your long-term wealth. Whereas you do a fix and flip, you make some money and that's gone. You're not building any wealth on that building. If you do a fix and refinance and hold, that's a great way to earn money too. You know, you can fix up your property, pull the equity out that you put in, and then keep it as a long-term buy and hold. That's another really great strategy as opposed to straight fix and flip. You're building up equity in a couple different ways in apartment buildings. One is just by the regular appreciation that you have every year with inflation. That's one way you're building up equity. Another way you're building up equity is through forced appreciation. So when we take on a building, generally we're looking at stuff that has some forced appreciation available in there. Things like increasing rent, decreasing expenses, managing the building for less vacancy, higher occupancy, that sort of thing. Maybe putting washer and dryers in where it's permitted, different things like that. That's forced appreciation. So that also builds up your equity. And then the one that's my favorite, because it's consistent, is the fact that you own an asset that somebody else is paying off. That is so huge. And if you can wrap your arms around that one and take it to the bank, like I said, I never imagined in a million years that I would have people putting $25,000 a month towards my retirement plan. Somebody else doing that. So that's another real key to wealth, and a strategy that Robert Kiyosaki talks about all the time, and that's buying an asset that other people pay off. You can do that through real estate. You can also do that through a cash flowing business. So it's not just real estate, but it works in more ways than one. So if someone were to give you $5 million today to invest in real estate, are you confident in your abilities to put that money in the right place and put the deal together from start to finish? If you're not, you need to check out my 90-day to 5K program. Starts tomorrow, and we've still got some room if you want to look at that. You need to educate yourself. You need to take some time to educate yourself so that when you're sitting in front of an investor, first and foremost, your confidence is there that yes, I know how to find a great deal, and yes, I know how to manage that great deal, and yes, I know how to make you money. Those are the three key things. You know how to talk to an investor, you know what to say to them, that sort of thing. I'm just gonna check my time out here. Give me 1 second. Hard to see in here today. The sun is shining brightly. Okay, 10:15. Does anyone have any questions on the mindset of the entrepreneur versus the mindset of the real estate investor? Can you see now where your value really lies as a real estate entrepreneur, how you can really help a lot of other people invest in real estate and earn a part of those great returns that you're able to do? I was going to say good morning to everyone. Good morning, Amanda. Good morning, Judy. How are you? Good morning, Chandel. Good morning, Rob. Good morning, Dave. And good morning, John. So good. Any other questions? How about any mindset questions? You know, we had, I think we're on module 8 or something with the mindset course. And I was very late putting out the post for this weekend for the live Q&A. So I only had one person on there, but we had a nice little chat. And again, that's totally my fault, but we'll get it out to you earlier this week and make sure that more people are on there. But what are you getting out of the mindset course? Is it allowing you to think bigger, realizing what's holding you back, some of your limiting beliefs that we've brought right from childhood to where we are now? Oh, good. Well, thank you, Judy. So sweet. Good morning. Doing great. Glad to see you live. You know what? I'm just finding it easier and easier every day to do live videos. I'm doing some training on how to maximize Facebook. And I'm always concerned with, what can I write? What can I write? And I realize, you know what? I don't have to do any writing. I can go on and do Facebook Lives every single day. It's just easy for me. And really, one of the biggest things that Facebook's ever done is allow these Facebook Lives. And people just like to watch them, whether it's 15 minutes, 20 minutes, a half an hour. I find that the longer they are, personally for myself, if I see that it's going to go on for 3 hours. I had a master class the other day I was interested in until I logged on and it was 3 hours long, and I went, I have no time for that. I need my education in bite-sized pieces, hour maximum. But if I can get even some in little 5 and 10 minute pieces, I love that too. Good morning, Logan. How's that new building coming? Did you get it all under contract? Is it ready to go? You got all your investors in place? Yes, absolutely, Jennifer. The video will be available for replay. As soon as I'm done, I will post it. So yeah, you'll get to hear it right from start. Amanda says, can you go over the various ways that an entrepreneur contributes to a deal and how they make their money from it? Yes, I did cover off that a bit, Amanda, but yeah, the various ways that an entrepreneur contributes is, first of all, one of the things that I mention to people is you should analyze 100 deals so that you really know what a good deal is, and you can analyze in different areas so that you can kind of figure that out. And so that's one thing. The other thing is after you're analyzing those, it's making the offer, getting the offer accepted. You might analyze 100 deals. Out of those, you might make 10 offers. Out of those 10 offers, you might get 3 accepted. and out of those 3 accepted, you should get 1 property. So that's a lot of work. It takes, even if you just do a 10-minute analyzation, 100 times 10 minutes is a lot, so that's a lot of the upfront work that people don't see. They see the 1 deal that you bring, or maybe the 3 deals that you bring them, and then the 1 deal that you close on. They see that only. They don't see all the rejection and all the things that didn't work, all the times you made the offer, all the times you did the negotiations and it didn't come out. When I tell people too, when we went through the 5-day challenge, about don't worry so much about negotiating at the beginning. That's what your due diligence period's for. So even after you get a property under contract, you're still you're performing all the due diligence, which is inspecting the property, getting the insurance in place, and you might make all those calls, inspecting the property. You might make the call to get the insurance. You might be talking to your lawyer about it. Sometimes you incur some costs, and then that deal doesn't go anywhere, and then it's back to the drawing board. So what you need to realize is all of that stuff that you're doing maybe 10 times, 20 times before you actually get a physical deal you're going through. So when you're asking for a 1% acquisition fee, that's to cover all the work that you've done and allow you to keep doing that so you can keep analyzing buildings and keep working towards building building your portfolio and bringing more deals to the table. Does that make sense? Judy says she's loving the mindset course. It's really helped and getting excited to start finding some deals. Okay, perfect. Well, I can't wait to start seeing you get some deals, Judy. That'd be awesome. And you know what? With a lot of people, it's the mindset stuff that stops us. It's getting to understand our value, really understanding why people would want to invest their hard-earned money with us. And a lot of it is just that people are tired of the ups and downs of the stock market. I don't know if you guys been watching TV and different posts that come across. I know I get a lot from email talking about the stock market correction that's bound to happen because of the way the US dollar is and stuff like that. Well, that scares a lot of people, but you know what? They don't know what else to do. So if you can show them something else that's not tied to the stock market, then you're better off. Oh, excuse me. I just hate having a cold. Raheem says, I contacted 2 commercial realtors this morning, but they say there's nothing in the market and properties are old and not worth buying at the price they're asking. What area are you looking in, Raheem? And hopefully I said your name right. Judy's getting rid of limiting beliefs and fears. Yeah. And you know what? That's a big one. One of the things that sometimes that we limit ourselves is thinking of the value we bring to a deal, right? And we have to get over those limiting beliefs and understand why people would really love to be working with somebody like us, helping them get into real estate. Rob says, we're looking to make an offer on a 12 unit this week, but running into the challenge of the seller being slow to get financials to us. You know what, Rob, make the offer and force them into getting the financials to you. You can always do the analyzing after you get those financials. You don't want to lose the deal to somebody who's a little bit more aggressive and goes in and makes the offer. Go in and get the offer accepted, whatever it takes, and then they'll know you're serious and that you need those financials, because you can't remove conditions until 90 days after you get all the financials. So put that in your offer and you'll get it. Okay, you're looking in Ontario and the Greater Toronto, GTA is Greater Toronto area, right? And you know what? They may be right. Their prices are a little overpriced in Toronto. But you know what? There's other places to look. Maybe Hamilton, Vaughan. There's different places around Toronto that prices aren't anywhere near what they are in Toronto. So maybe try looking in those areas. But because there's a lot of foreign money coming into our country, and they only think of 2 cities Vancouver, and Toronto. And those places will always have higher prices just because of that. They're the two biggest centers, but there's value out there to be gotten. I think I was reading the other day that the cap rates are like 1% and 2% in Toronto. Well, you know what? You're barely cash flowing. And a lot of those outside investors, they're just looking for a safe place to put their money. Now, if you could teach those outside investors how they could have a safe place to put their money and earn a decent return, you'd be a hero. So keep looking. Just maybe look outside the perimeters of Toronto. Maybe look at some of the other areas, like I think there's somebody in Ottawa right now in the group that's finding some good deals. Barrie, Ontario keeps coming to my mind. Hamilton, different places like that. So might look around stuff like that. Rob, your unit's in Outlook? Perfect. Raheem says, look through realtor.ca and ICI World, but there's nothing. How do I get owners' names? You know what? You can actually go to ICS and check out titles of apartment buildings, and they tell you who owns them. Now, a lot of times those buildings are owned by numbered companies, but the profiles, I believe, are in the registration, so you can always find them. It's just a lot of work. I've never done it that way. Fortunately, we've been able to build up our network, and we find most of our deals privately. Even like all the ones that we've been working on in Saskatchewan have all come to us. Well, just about all come to us privately. I've got a couple students that have found some that have been listed on MLS. So keep looking. It's not every day that they're listed, and the better place would be networking. If you could get around a place, excuse me, this cold is just driving me crazy. If you can get around a place of apartment buildings owners, like if there's landlord associations and stuff like that, see if you can become a member of that, because that's where people would be having their buildings, or with buildings would be going. Different networking events you'd find people who have buildings already, and you never know who has decided that they want to sell a building for whatever reason, and you want to connect with those people so that they think of you first. And you know what, this is actually one of the sweet things about apartment buildings, is very seldom does the value go down, even if the market's not perfect. So you're not going to get any great deals, or very, very few great deals. There's one recently that I know somebody got a good deal on it, and it was something that was in the flood zone and had been flooded, and the guy I think the owner just got so frustrated he didn't want to deal with it, and so somebody got a really good deal on that and built it up, and he's got the opportunity now to sell it for a really good price. So you know, there's some opportunities like that, but again, you have to be networking with those people so that you get a chance. You're one of the first people they call. Okay, Amanda also posted a few, yeah, I should get some Thieves Essential Oil. I guess I get that at the health food store, right? I have to make a trip to town to do that. Oh man, I hate being sick. It's just the worst feeling in the world. Amanda posted some sites on here, Raheem, that you can check out too, for sale by owner and ComFree and stuff like that. I'm going to sign off just because I know I'm going to start having a little coughing fit here if I don't. I'm going to be back on tonight with some recaps of our 5-day challenge of last week, so you'll hear from me then. Do you distribute that, Judy? Let me know. Reach out to me by email if you distribute that. I'll get it from you. Okay, thanks everyone. Have a very, very good day. Oh, you know what? That's a good question. I'll take a second to answer it. Raheem says, one of the realtors mentioned that they spend a lot of time in Ontario Tribunal because of bad tenants. Any experience? We do. Now our ours is called the Rentalsman here, but our Rentalsman is actually more owner friendly than Ontario apparently, and we don't think it's good. So I feel for you. Unfortunately, there's a lot of bad tenants out there, and when I say a lot, you know what? Maybe 5% of the 100% of renters, maybe 5% are bad ones, but the 5% sometimes make themselves feel like they're the 95%, if you know what I mean. So 2 things I'm going to get you to suggest. One is mindset. I attract great tenants. You know, I was a tenant, I believe, till I was 30 years old. I never made a mess. I kept my place clean. I did get noise violations every once in a while, but they didn't charge me. They just give me heck. And never, ever missed a rent payment. So there's a ton of renters out there like that. Do credit checks. That's a big one. That's one of the things that we started incorporating, is doing credit checks, because that weeds out a lot of bad tenants. And Alberta's even better at that than we are here in Saskatchewan. They've got different places that you can go. If people aren't good tenants, they can get blacklisted and not be able to rent. So yeah, you will have some. Hire an experienced property manager and let them fill your buildings, because a lot of owners don't know how to screen their tenants properly. Okay, I am really going to sign off here, and I'm going to talk a little bit later on this evening. So thanks very much, everyone, for joining and for asking the great questions. I absolutely love it, and we'll talk to you very soon.